And it's great to have you join us in another edition of the only weekend business program on Channels Television, Capital Market Live. I'm Ladi Williams. Let's begin the show with a quick review of some of the happenings within the capital markets this week. We see data insights provider STARS has projected that Nigeria's inflation rate may climb steadily till the end of this year, rising around 30% by December. The firm, which made this known while unveiling its inflation forecast for the African continent, said its forecasts are based on trusted econometric tools that consider several factors driving inflation, particularly the falling value of the naira. STARS forecasts that Nigeria's annual inflation rate may reach that level, which it has never reached since the country's modern democratic era, and estimates that the exchange rate gap will keep widening and exerting further inflationary pressures unless significant dollar inflows come into the economy. And leading global investment decision provider MSCI Inc. says it will reclassify Nigeria's MSCI indexes from frontier markets to standalone market status to coincide with the February 2024 index review. The firm explains that its conclusion follows feedback received from market participants from its recent extended consultation on a market reclassification proposal for the MSCI Nigeria indexes. MSCI extended an initial consultation conducted between June 2022 and June 2023 to September the 29th to allow more time for liquidity situation in Nigerian FX market to stabilize following measures announced by the CBN in June and after. As the consultation earlier suggested that a limited accessibility of the Nigerian equity market would warrant the removal of the MSCI Nigeria indexes from the MSCI Frontier Market indexes. And the West Africa Capital Market Conference 2023 held this week with the theme Infrastructural Deficit and Sustainable Financing in an Integrated West Africa Capital Market, a two-day event which is the largest gathering of capital market policymakers, brokers and other stakeholders, is jointly hosted by the West Africa Securities Regulators Association, Economic Community of West African States, ECOWAS, and the West African Capital Market Integration Council, WACMaC. This is what went down. Take a listen.
In value.
It is the third edition of the West Africa Capital Market Conference, and this time it's being held in Lagos, Nigeria. The two-day event drew capital market regulators and stakeholders across the West African sub-region to deliberate on ways to tackle infrastructure deficit as well as embrace principles of sustainable finance. Vice President Senator Kashim Shettima was represented by the Special Advisor to the President on Economic Affairs, Mr. Tope Fashua, says that the infrastructural deficits in the country and the sub-region are better tackled by domestic capital market and not only foreign borrowing.
If this is so for Nigeria, it presupposes that the entire region has similar or perhaps larger infrastructural deficit waiting to be filled. They are better filled from inside, not through foreign borrowing alone. The job of the capital market in Nigeria and of course West Africa is therefore cut out for it. And this extends to West Africa and Africa at large.
Thank you.
On his part, the Lagos State Governor, Mr. Babajide Sanwo-Olu, acknowledged the role of the capital market in providing long-term finance.
And so hosting this prestigious conference in Lagos offers us a unique opportunity to showcase our economic mettle, our rich cultural heritage, and our warm, very warm Lagos hospitality. We hope that the event will not only foster greater integration and capital market formation, but also stimulate tourism potentials and attract even more investors to our region.
The Director General of the Securities and Exchange Commission and Chairman of the West Africa Securities Regulators Association gives his expectation on the outcome of this year's gathering.
We are confident that this event, themed Infrastructure Deficit and Sustainable Financing in an Integrated West Africa Capital Market, will foster integration, encourage capital formation, promote tourism, and attract investors to our region.
As a flagship program of West Africa Securities Regulators Association, the West Africa Capital Market Conference is a biannual event that seeks to present the West African region and the continent the opportunity to address important issues related to the orderly growth and development of the regional and continental capital markets. And the federal government has called on the West African stock exchanges, operators and regulators to think hard on ways to find liquidity, growth and sustainability in their markets. But how can this be achieved? Join us for this conversation now is Dr. Okemeno, Chief Economist, Securities and Exchange Commission, Nigeria. Good evening. Great to have you on the show.
Thank you for having me once again, Ladi.
Yes, quite an eventful week for market regulators in West Africa and other major stakeholders. Talk to me about your major takeaways from the events at WACMaC 2023 this week.
Okay, we had some very important takeaways. You just showed the rep of the Vice President, Kashim Shettima, GCON, and you also showed the Governor of Lagos State. What we did was to bring the stakeholders, from the market, from the government, from the legislature, everyone who would have a stake in this to come together and reason. We all know that we have a huge infrastructure gap in Nigeria and in West Africa. And that gap cannot be bridged with our budgets. So one takeaway was we all recognized the problem and we all recognized the solution, private capital through the capital market. Another takeaway was how do we de-risk it? How do we make it something that people would embrace? How do we make it work? So we talked about different things. We talked about how to attract capital into that part of the market, how to put the necessary rules, regulations, laws in place to make it work, how to remove the risk, like I said, de-risk it, how to make it attractive generally. So that's what we did. And then we had a few stakeholders also talk about what they would see as problems. So we've already anticipated the problems, and we are starting to bring up solutions to those problems.
And talking about the Vice President, Kashim Shettima, I made the call at the conference that, West African stock exchanges, operators and regulators must think hard, to find liquidity. And I'm sure that would not be easy, definitely. But with all that was discussed, were there any practicable solutions found?
Yes. For now, we have Naira liquidity in the market. We have a few problems with FX, like but we think that with all the plans we have in place and all the things we are hearing from the Central Bank and from the Ministry of Finance, that this will ease in no time. Remember that we used to have a market, an equities market that had 50% foreign participation. That has dropped a lot, and we think that if all these plans are put in place, liquidity will improve and these monies will flow back in. So that's one area. But remember also that we have a huge amount of capital formed in the pension industry. We also have that in our CIS funds. This money can be better channeled. That's our belief. Presently, some of this money cannot even find good, high-yielding, I would say, securities to pursue. So we think that if we can channel these monies towards infrastructure development, it would help. Let me give you an example. We have a very huge housing gap. From data from FMBN, I think it's about 14 million houses we need to provide. And one of the reasons we have that is that we don't have a viable mortgage market. So what we are doing is we are thinking, okay, can we set up something like that as mortgage-backed securities that will work? So we have a bill we have prepared now that will soon be at the National Assembly to lay the groundwork for a viable, mortgage-backed securities market that will provide money for us to use to build these houses that are needed. Think about also the road networks that we have. We have roads that are not in their best shape, I would say. If you're one who plies the roads from Lagos to Abuja, for instance, or Abuja to Kano, you know that these roads are, need some work. And I think that Nigerians would not mind if the roads are put together and, in the way they should be. They will not mind paying a few tolls. So if we can lay the groundwork from every point, I mean, the legislature will do their part, the market will do their part, everybody does his part, we can put these things in place. Remember that one of the solutions to our FX problems is production. But you really can't produce, you really can't sell, you really can't compete if you don't have infrastructure. If you don't have cost-reducing infrastructure, you really can't compete. So if we want to sell, every time we're talking about how we should increase exports and things like this, but we first have to address the infrastructure problem. Because you really cannot compete if your infrastructure makes your production too expensive. So these are the things we're talking about. So we believe we are, bringing out solutions that will help us achieve, our goals, help the economy grow, but also solve the liquidity problems in the short run.
Right, and talking about the liquidity problems right now, would you say there are some unusual options open to boosting liquidity in West Africa capital markets? We know the usual suspects are, but are there others that we're not looking at that I think we should be looking at?
That's exactly what we are talking about now. Presently, we do not have strong investment in infrastructure, and that's something we weren't looking at, we want to start looking at. We think that in many of the countries where there's capital, a lot of capital, especially in the western part of the world, there are no chances to get the kinds of yield that can be gotten here. They do not have the kinds of infrastructure gaps that we have. And we believe that if we can attract capital into that, both the suppliers of capital and the people who would build infrastructure will benefit, and the people who will use it too. So we think that we can set up a market that gives good yield to people who invest in it, and thereby attracting investment from outside. So yeah, that's the area we think that can help us achieve what we want. And Ladi, this is not an area that will take a lot of time to develop. A lot of the things that we need to put in place are already in place. We just need the stakeholders to come together and put in a few more things, and before you know it, we are attracting the capital that we need. So yes,
right.
This is the area we think that will quickly help us out.
All right, with discussions so far, what's your outlook, for West Africa capital markets, say in the next 5 years, with everything that was discussed and, the solutions preferred?
Oh, it's a good outlook, Ladi. We presently have an integration project going on in West Africa. We want to be able to trade across the region. A broker in Nigeria can buy stocks in Ghana or bonds in Ghana, in Cape Verde, in Cote d'Ivoire, and around the region, and vice versa. So we see a very strong market being built because, of course, the capital markets work better with size. So we are building a market that will, increase the opportunity set for everyone. It's a good outlook. Over the next 5 years, we believe that we'll be done with the phase 2, which is what we are doing now, and we'll be able to create an integrated market, a market that is seamless, that expands, the opportunity set. Imagine all the companies listed and all the securities listed across all the bourses, in the region being traded at the same time. It gives you a diversification opportunities. It gives you opportunities to get into securities you would otherwise not be able to. So it's a win-win for all of us in the region.
Talking about integrating these capital markets within the region now, let's take, for instance, an investor in Nigeria, invest in a securities market in, take, for instance, Ghana or Egypt. Would that be importation or exportation? How do you see that?
Okay, first, what we are talking about now is the West African region.
Right.
An investor in Ghana, the way we planned for the market to be, it will be integrated and seamless in such a way that we will not think about it in terms of integration per se. So it will just be a bigger market that provides opportunities for diversification. I want to give you an example. You know how inflation has been in Nigeria, almost 30% in Nigeria. In Ghana, over 40%, hitting 50 at some point. If you go to our neighbors in the UEMOA region, I mean the French CAF region, Monetary Union, inflation hasn't been that bad. Even the currency depreciation too that Ghana and Nigeria has not also happened there. There was a time it happened also when ours was stable. So the thing is, you're able to better diversify. So you don't get to lose capital. So we are not looking at it in that way. We want an integrated region. Remember that we've always been on this integration project. Remember that we were talking about one single currency, the ECHO. Remember that some institutions have been set up for many years. WACMaC, West African Monetary Authority, and WAMI, West African Monetary Institute, have been set up for a long time to achieve this integration. So while they are doing it from the central bank side, from monetary side, we are doing it from capital market side. So we are not going to be looking at it in terms of importing or exporting capital. We are looking at it as a bigger pot for everyone in the region.
Right, every investor looking to beat inflation at this time, and definitely I hope investors, win going forward in this part. Thank you so much, Dr. Okemeno, Chief Economist, Securities and Exchange Commission. Thank you so much. All right, we'll take a break now. When we come back, we'll review the equities market. That's in a moment. Just stay with us. Welcome back, and it's earnings season around the world for listed companies, and right here in Nigeria, companies are reeling out financial reports for the third quarter of 2023. Let's get a sense of how investors are reacting right now. Let's talk to Tajuddin Olayinka, CEO, Wyoming Capital and Partners, joining me via Zoom. Great to have you on the show. Hello, Mr. Tajuddin. All right. We'll try and get Mr. Tajuddin. Okay, you might have to unmute. Mr. Tajuddin. All right, so we'll try it again. Mr. Tajuddin, can you hear me now? All right, let's get a quick review of the local bourse this week. See, the domestic bourse ended the fourth trading week of October in the green, despite a subdued start in the week, as gains from Geregu PLC and Seplat Energy outweighed losses in MTN Nigeria and some other markets heavyweight. To see the domestic bourse there, as a result, the All-Share Index climbed by 0.33% week on week, while the market cap closed the week higher, but below the 37 trillion naira mark. However, trading activity level was mixed, as the total traded volume increased by 1.6% week on week, while the total value of equities traded, that dropped by 4%. Sectoral performance was also squarely mixed, as the banking, consumer goods, as well as the oil and gas indexes of the NGX advanced, while the industrial goods and insurance sectors we see that decline. Chams Holdings topped a list of 39 gainers, up by 27.52%, while VFD Group led 41 other losers, down nearly 19%, while the trio of Axis Holdings, Fidelity Bank, and UBA were the top three most actively traded stocks for the week. All right, let's try and get Mr. Tajuddin Olayinka now, CEO, Wyoming Capital and Partners. Can you hear me now? Hello, Mr. Tajuddin. All right. Okay, we're still trying to get Mr. Tajuddin there. And yeah, as we said, the equity investors this week managed to eke out a gain for the week. And we've seen other markets take for instance Egypt there, the EGX 30. We saw that in Egypt. We see that market has rallied over 15% this week. We're seeing investors, using that market at this time to hedge against a possible currency devaluation there for the Egyptian pound. And we'll also see back here, we'll see if investors in Nigeria will also be looking at that. But let's get some other earnings now. We see Transcorp, they're posted leading conglomerate and transnational corporation that has announced its financial results for the third quarter of the year, which shows an impressive performance across all its major indices. Highlights of the results sent to the Nigerian Exchange Limited shows that the group's total revenue surged by 33% year on year to about 128 billion naira as at September the 30th. At the same time, its operating income that grew by 36% to 42.7 billion naira. Total assets increased to 479.8 billion in the third quarter of 2023. Its hospitality businesses sustained strong growth by 31.76%, while its power subsidiaries revenue grew by 33.4% to 98.2 billion naira, despite the challenges of gas and infrastructure in the sector. And to some other earnings now, we'll see to the financial services sector, we'll see Guarantee Trust Holdings company that released its unaudited financial report, and we'll see for the period ended September 30th, 2023, showing that it posted a profit before tax of 433.2 billion naira. The amount represents an increase of 155.2% over 169.7 billion recorded in the corresponding period of last year. The group's loan book grew by 17.7% from 1.89 trillion naira recorded as of December 2022 to 2.22 trillion in September 2023, while deposit liabilities increased by 37.9% from 4.61 trillion naira in December 2022 to 6.36 trillion in September 2023. The group's balance sheet remained well structured and resilient, with total assets and shareholders' funds closing at 8.6 trillion and 1.3 trillion, respectively. All right, let's get an outlook for next week now. Bring you some expectations on Nigeria's financial markets for next week. I'll start off with the money market, where buoyant liquidity is expected in the financial system as inflows from 582.94 billion naira FAC allocations will likely saturate the system. At the same time, overnight rates is seen heading downward. Over to the bonds market now, where yields in the secondary segment is expected to remain elevated, driven by sustained imbalance in demand and supply dynamics. At the T-bills market, secondary market, we see traders expect inflows into the system to drive demand, while a downward tilt in yields is also anticipated on expectations of higher liquidity. And finally, at the equities market, its direction is expected to be shaped by ongoing Q3 earnings season as investors cherry-pick fundamentally sound stocks. So apologies, we couldn't get Mr. Tajin Olayinka, CEO, WACMaC Capital. We'll try and get him again sometime. No technology sometimes can just turn on you when you need it the most. Thank you so much for watching. I'll catch you again next Saturday. I'm Ladi Williams. Bye for now.